All right, guys. So you're welcome to this market review for the week, and I'm just gonna be going through a couple of high probability setups I've found going into this coming week, which is basically the third week of January. And so throughout this video, what you're going to be seeing me do is show you a couple of pairs I really do think are high probability trades going into this week and showing you what my expectation is. So without any waste of time, let's get straight onto it. So what I always like to do is I always like to begin the week with understanding the direction for the DXY. Because as you might have noticed, I am a CFD trader, which means I tend to trade more Forex pairs and I do a couple of trades on gold as well, and at times crypto, why not? Right? So this video is all about that, showing you the trades I have in stock on my watch list and what my expectancy is on these various trade setups. So the very first one we're going to look at is the DXY. And as you can see here, all the way from this last week, we've had a nice massive run to the upside. So as DXY stands now, I have this current high here at 99.567 as my short-term drawn liquidity. So on the daily time frame, we're looking at this specific daily candle's high, and I'll be trading from, I'm just looking for setups, expecting DXY to continue its rally at least all the way up here going into this week. And the second target I'll be looking at is going to be that area there, just where we have this inefficiency in the form of a fair value gap. So that's what I'll be looking at on the DXY. So in order to get an entry or, understand where price might react from, you're gonna go on the 4 hours. So on the 4 hour time frame, we're looking at we're looking at how prices developed. And as you can see, we've created successive levels of, higher highs and higher lows. You can clearly see it present itself in this manner. You can clearly see these successive, higher highs as you see here, and these higher lows. So this tells you without any doubt that we are indeed you know, in an uptrend. So as it stands now, I'm looking at this current 4 hours candle, and I do love the way it closed on Friday last week. And we did form this inside bar. So this is an inside bar candle right here. So an inside bar candle is basically a candle wherein you have a huge displacement candle, either to the upside or to the downside, and then the next candle basically forms and closes within this massive candle. So this is like the engulfing candle, which most of you guys do know, but this is kind of on the other side, because when it comes to engulfing candles, you always want to make sure that the engulfed candle comes before the engulfing, right? You always want to look at something like this. So this right here representing the engulfed, and this right here representing the engulfing. So, but in this instance, an inside back candle is that which forms wherein you have a massive displacement candle, either to the upside or to the downside, and you have the next candle forming within the previous candle's range. You see that? So that right there is what denotes an inside bar candle. And what we have here is the formation of an inside bar candle. And what I expect going into Monday, probably Tuesday as well, is I want to see the market, basically sweep out the low of this inside bar candle. So we're going to sweep this low, and I would love to see a beautiful reaction of this other block into this other block, and from there I'd expect higher prices from that level. So when we go down on a much lower time frame, let's say the H1, on the H1 time frame, you can clearly see here that we did have a run, on stops on this low right here. We had a run on stops on this low right here inside of this key level, which is in the form of an order block, a bullish order block. So we had a run on stops inside of that bullish order block on the 1 hour time frame, and we had this massive displacement to the upside on this candle, taking out breaking structure to the upside. So as it stands now, what I'm expecting is I want to see price trade within this zone. So for my key level, I'm looking at this inefficiency, which is the low of that inside bar candle we saw on the 4 hour time frame. So we're looking at this inefficiency here. So going into this week, I love to see DXY come all the way down here, sweep out this low, or fill this inefficiency rather, and we trade all the way to the upside. And I love how the market closed last week. We have this consolidation or accumulation, if you want to call it that way. So we have this consolidation here. And as you know, those of you who follow my content and who have been around for quite some time, you're gonna know that this is the power of three in play, okay? So basically accumulation, I want to see a manipulation sweeping the low of these accumulation. And then I want to see price trade all the way up here, taking out this high. That's the very, very minimum, target for this week. So I'm like 80, 90% sure of this specific price delivery. So we're going to see how price basically decides to play out. Monday open, going into Tuesday, Wednesday. So I think this is a realistic objective that we should be aiming for on the DXY. So we equally have these relative equal highs here, right? We have these relative equal highs here that only screams liquidity, right? So this is like a massive liquidity pool here resting above these equal highs as well. So the conditions for these to actually play out is going to be, I love to see the market open. We trade, first of all the way down here, taking out the low of this consolidation, and then which is in tandem going to be the sweep of Asian session low, probably Monday, and then we're going to see manipulation during that London session, inside of this inefficiency, and I want to see the market deliver in such a manner. So this is my expectation on the DXY. And if I'm expecting bullish price action on the DXY, that's definitely going to translate into a bearishness on the major asset classes like GU, EU, OZ, NZD, and so on and so forth. So that being said, we're gonna have a look. You can just use these and you frame, a setup on all of these major pairs because once you get the direction of the DXY correct, it's going to be so easy to, pick a side on the major asset classes like EU and GU. So this is what I'm expecting here on the DXY going into the week. So I really want to see short-term bullish dollar, which is going to translate into some sort of short-term bearish euro dollar, bearish pound dollar, and OZ dollar. So another trade which I think is really high probability going into the week is that of NZD dollar. So for NZD dollar, let's have a look. All right. So already we are in a sell here on NZD dollar, and it's basically translating to what I said earlier on the DXY. So let me just change the broker here. I'm gonna choose FXE. Let's try FXE. All right, let's choose FXE. So okay, looking at New Zealand dollar, let's have a look at let's have a look at the daily. Okay, this is the weekly. So on the weekly already, not much to be said. But if you look keenly here, we've been the last 2 previous weeks before last, we had massive bearishness to the downside, and we had market close below this specific massive impulsive bullish candle. And this to me denotes a shift in market structure. And this in turn tells me that we might see lower prices on the New Zealand dollar. And our drawn liquidity obviously is going to be these equal lows right here. So I'm looking at these equal lows, which are basically the start of this inefficiency in the form of a fair value gap. So I just want to see price trade all the way down here inside of this inefficiency and probably inside of these weekly order block. So that's just the take because I already have my DXY direction in check. So this is obviously just going to be a walk in the park. So we look at the daily time frame. So here's what the daily time frame looks like. After these run-on stops on those highs, we had this shift in market structure, which is confirmed by these specific candles close. And here are the equal lows we have on the daily. So this is our weekly order block right here. So we can die these down. As you can see, we have this is the low of the weekly inefficiency. So at very best and on the daily, we have this massive fair value gap as well, which is in alignment with all of that. So it's just confluence and confluence and confluence. So you guys should take these out or take these out. So I'm looking to see price drop inside of this daily inefficiency on NZD dollar. All right. So this is what I can actually make of this on this specific daily time frame. And on Friday, we saw a run and stops from these highs, from this daily candles high. Let me take this off. And we did close within this doji, which is this specific candles range. So I'll be looking at these for those of you who trade CRT. This is CRT in information. So I'm looking at this right here, and I want to see price for this coming week, which is Monday, Tuesday going. I want to see price open. I want to see an opening price. A little bit trade. We trade a little bit upwards, creating the high of Monday, and we sell off from there. So I'll be looking to take a trade setup somewhere around the high here. So, and for us to get the perfect spot wherein we can basically enter into that trade, we'll need to go on a lower time frame just to align our time frames and get a very sweet spot from where we can consider to take our entry. So I'm looking at this area here. This is the area I'm looking at. Okay. So if you look at these, we're having these equal lows. We still have these equal lows here. All right. We have these equal lows and we have this sweet rejection from this area here, which is on the 4 hours time frame. You can see that that specific area here aligns with this inverted fair value gap at this area. So look at this. So we have this inverted fair value gap at this area here, which we can see a very nice rejection from that zone. All right. So we have that inverted fair value gap, which we rejected off. All right. So right now, what you can do is, of course, this is the 4 hours time frame. Our drawn liquidity remains the same. Okay. We're looking to see price sweep out these equal lows going into this week. That's the very, very, realistic short-term target. Let's have a look at the 1 hour. All right. So on the 1 hour time frame, here's what it looks like. We've got on this 1 hour time frame, we've got this other block that aligns with that inverted fair value gap. We had a run on stops from this specific high, and you can clearly see that we did have a break of structure the moment we closed below this specific candles low. Right now, I can decide to go lower. We can just decide to go, extra lower to get a specific point of entry. So let's look at the 30 minutes. Here's what it looks like. Have a look at the 15 minutes. All right. So looking at the 15 minutes time frame right here, looking at this 15 minutes time frame right here, my expectation would be, because I first of all need to understand what price actually did inside of that reaction zone. So we had a run on stops here on this 15 minutes time frame. We had a run on stops. We had a breakout structure or a shift in market structure from this low, and we created this high. So I would prefer to see price coming back to take out this high as some sort of inducement liquidity or internal range liquidity before we decide to sell off. So my preferred entry zone would be above that high. So basically what I'm saying here is I want to see the market open. If we do open somewhere here, and I want to see Asian session trade towards this level, sweep that high during probably London, creating some sort of power of three, accumulation, manipulation, and distribution. So I want to see some sort of power of three from this zone, and I love to see the market sell off from that specific area. I'm just going to mark out this entire zone. So that's going to be the area I'll be looking at. All right. So here's what I want to see the market do. So in terms of entry, I can have an entry here, but the very important factor that is going to determine if this is going to be valid would be the timing, because time comes before price. It doesn't matter how good looking price action might be. If it occurs within an off time of the day, that's not going to be an ideal scenario for me. So NZD dollar, here's very good setup, I think would be essential for you guys to keep an eye on. And we're just basically going to see. So you don't want to, risk too much on these. Always maintain proper risk management. Okay, so this is a decent 1:6.8. If we get all the way down here, that we're looking at close to 10R, which is 10%. So if this plays out, this is going to be a very good setup for the week. It's going to be a banger trade for the week. And we're just going to basically watch these and see how it plays out. Okay. Let's move to the next. So the next pair I do have on my watch list going into this week is NAS100. So the next pair is Nasdaq. All right, so let's have a look at Nasdaq. Okay, so when it comes to NAS 100, I'm already in a couple of sales on NAS for these for last week. I'm already in on a couple of sales on Nasdaq. So let me just show you guys. Let me just show you guys what up. Okay. So I'm currently inside of this. These are the sell positions I'm in. All right. So going into this week, it's crystal clear what my expectations on Nasdaq are going to be. And I'm still very, very much bearish. So just basically going into the market and looking for a potential re-entry. So Nasdaq 100, let's see, so okay, FXCM. Let's look at it. FXCM. All right. So Nasdaq 100, looking at these, let's look at the daily to begin with. All right, kind of very, very messy price action on the daily. Uh, but on lower time frames, it actually does give clarity. Okay, so the very first thing I noticed when I open this chart is I'm trying to look at where did the most recent run-on stops actually take place. And when you look at these, we have these highs here. So this is where the most recent run stops actually took place. So we had a run stops from those highs, and we had a reaction of this daily bearish order block. You can see that clearly, right? Beautiful reaction of this daily order block. Okay, and after which we did see a break of structure to the downside. So we had a break of structure on the downside once this specific daily candle, which is Wednesday, the 14th of January, actually closed below these lows. So that right there is the shift or break of structure to the downside. And whatever price action I'll be expecting is obviously going to be bearishness. So for first short-term objective, I'm looking at these lows. I'm looking at these ones here. And we equally have these daily lows. So going into the week, I'll be looking to see price take out at least these first two lows, right? One, two. So those are the first, the ones I really do want to see price clear out. So let me just take out the third low so that you don't get overzealous and probably tend to lose on the winning trade, right? So we're just going to focus on this one, two short-term intraday trades. So going into the week, similar price action to what we saw on the on NZD dollar. So right here, I just want to see price take these out and these out. All right. So now when it comes to this specific low, I can decide to place it below this area here. Yep, because I think we did tap into that. Anyway, let's just stick to it to these, okay? Let's just stick to that specific area. All right. So coming back here, here's what it looks like on the 4 hours time frame. And what do we have here on this 4 hours time frame? Okay, so we have run and stops from these highs, run and stops, had break of structure, came back, took out internal range liquidity in the form of these highs, all right, in the form of those equal highs. And now we've seen bearishness to the downside. So going into the week, I just want to see price do this. Now, here's why I said earlier on that this is pretty much similar to what we saw on, NZD dollar. So what we have here as well on this specific 4-hour candle close is equally another inside bar candle. So going into the week, I want to see price open. That is, of course, if we do open without a gap. So if we can just decide, market can just decide and gap inside of this inefficiency. So I want to see price open, trade inside of this area, mitigating, this order block as well, this bearish order block. And then from there we sell off. That's what I would love to see for Monday. So that's my expectation on Nasdaq, basically. So on NQ, here's what I'm expecting. I want to see price trade come back all the way up inside of these inefficiency order block. So expecting something like this, and I'll be targeting those lows. So in terms of an entry comes in there. Entry comes in the stop loss is going to be above that specific candle's high, and target is going to be this low, and that's a decent 1:6 risk to reward ratio. So you equally want to keep an eye on these and basically see how it plays out going into this upcoming week. And we can see here on the 1 hour time frame this decent accumulation, So I want to see a manipulation instead of this inefficiency, mitigation of that for us order block. And if the time of the day is right, which is obviously New York, London, Cape Zone, if the time aligns, then we're going to take the trade. If the time is off, then there's no setup, there's no trade. Okay. So that's going to be my personal expectation on this specific trade, which is the NQ. So, but last week I did had a first entry from this zone here. I had a first entry from this area. A re-entry came in here, and this is going to be like basically the third entry I'm going to be taking on this specific asset class. So that's it for Nasdaq. Another one on my watch list for this week, which I think is another high probability setup, which I'm going to be watching very, very closely, is US oil. Okay, I'm going to be watching US oil. So let's have a look at US oil. All right. Okay. So US oil, let's go to the daily first. I always do this whenever I'm looking at market, breakdowns, or whenever I'm trading. I always love to navigate my way from the higher time frames and dive down all the way to the lower time frames. So that gives me a bigger perspective of what the overall structure is so that I do not get caught on short-term moves that are wrong side of the market. Okay, excuse me. So looking at these on the US oil, hmm, interesting price action on the daily. Let's have a look at the weekly. Okay, okay, I love what I see. So on US oil, on the weekly, first of all, we can see a run on this low, right? We had a run on this low, and we've seen ever since we had a run on that low, we've been trading to the upside. And this specific candle here equally took out liquidity from this previous candle's low at these areas as well. So we had run on this low and successive bullish weekly candles. So as it stands right now, my take is we're still going to see higher prices on US oil. So I'll be looking to see price come and take out at least these specific candles high. So we have these, all of these kind of relative equal highs here as well. You look at this. So this candles high and last week's high, those are like relative equal highs. So that's my objective on US oil. I'm still want to see bullish price action on US oil, irrespective of the fact that we did close this um, previous weekly candle in this month. So when we go on the daily time frame, it gives us more in-depth, more perspective as to what the markets are doing. So on the daily time frame, here's what it looks like. So this is the high I'm talking about, and just above that high, we do find this sweet inefficiency here in the form of this VG. All right. So we have this inefficiency here, just above that high. Now, the deal here would be trying to pick out an entry area. And as it stands right now, we had this run on all of these lows here. We had run on these lows. Let me just pick the last run. So we had a run on those lows inside of this daily order block. You can see that. Inside of that daily order block, respected it, traded above, gave a shift in structure, which means we are bullish. Now, I want to see price probably come back all the way down here. So this is one of those weeks wherein I expect probably, let's say Tuesday, Wednesday to form like the low of the week, and then Thursday, Friday, we have the real moves. So getting into this week, I want to see the market open, trade lower, okay, feeling this inefficiency, and then giving us some sort of bullish structure to the upside. That's basically my expectation for these. And that's what these daily time frame actually states. When you look at the 4 hours time frame, it actually gives you a cleaner perspective and a cleaner view of what I'm talking about. So this is the daily inefficiency I spoke about. So we've got this daily inefficiency in the form of this fair value gap. We had a run on liquidity here, implying that these lows after the run, these are protected lows because we have huge institutions trying to protect their buy orders from this area. So as it stands right now, I'll be looking to see price trade inside of this area for continuation to the upside, basically. That's my take on the US oil. So my entry can come in somewhere here, somewhere around the midsection of that inefficiency. Obviously, stop loss ought to be below this low, but I'm pretty confident on this one. So my stop loss is just going to come at the same level where we had the run on this previous low. As you can see, at that 56.282 level, 295 level rather, and TP is going to be at this high here, which is giving us a decent 1:5 risk to reward ratio. So guys, these are the setups I'm looking at going to the week. You let me know what you think about them. Comment, do all those good stuff. I really appreciate if you can like, if you can, of course, subscribe, and drop a comment in the comment section. Let me know what you think about it. What's your take on these asset classes I've touched? Do you have a different view? I'll really be interested to know. So we've come to the end of this video. I really do hope that you found it insightful. And if you would love to see more content like this, of course, every like, every subscription is really going to encourage me to put off videos as such. I will see you guys on the next one. And until then, good luck and good trading. Bye bye for now.